This year, Caitlin, this is the biggest and obviously the highest profile. I don't think it's overstatement, TV hyperbole to say this is a critical time for the entire industry. Is it not?
Well, sure, it is. But for the grizzled veterans who've been around quite a bit longer than any of these newer companies that have failed in the laundry list that you provided, most of those companies were only a couple of years old, including FTX. The grizzled veterans have seen this before, and we're all saying good riddance. There was way too much leverage applied to this industry, to an asset that absolutely cannot be leveraged safely ever, Bitcoin. And you saw actually a lot of the Wall Street mercenaries come in, a lot of people from quant trading, a lot of hedge fund traders who wanted to apply their tools, their games to an unregulated asset class. I thought it was interesting that one of the more prominent ones admitted that he didn't even know what a blockchain was when he started trading crypto. That speaks volumes as to why the blowups occurred.
And yet people gave these firms billions.
Yes,
it's like,
indeed.
I don't know what a horse is, but I'm going to bet on the Kentucky Derby. And I'm going to bet $1 billion. And by the way, you have beautiful horses behind you.
Oh, thank you. Yeah, a lot. Seriously, a lot of reputations of previously respected venture capitalists and investors have been permanently impaired here. And they weren't listening to those of us who warned that these business models were inherently risky. And in the absence of regulation and regulatory clarity in the US, what ended up happening is that a lot of scammers and outright criminals filled the void. And I'll give you an example. Yeah. The offshore derivatives platforms were offering 125 to 1 leverage at one time. The onshore regulated derivatives platforms were not offering more than 2.5 times leverage. Okay, so at 125 to 1 leverage, which is one of the products that FTX offered, that would have, the house odds on something like that would have made the 1950s Vegas mobsters blush, because they were 99% probability that the house won. But in a upward trending bull market, they were able to wrap in. I saw from your report with Kate, 100,000 creditors.
Yes,
a lot of people
that we know of.
Right.
134 subsidiaries that we know of. I looked at the list. They're all over the world. Some of them bizarre names. Who the hell are they? We don't know. Right. I want you to repeat what you said just a moment ago for our audience, for the people in the back. 125 to 1 leverage?
Yes. Yes. And by the way, there are still other offshore exchanges that offer that. And those are 99% house odds contracts. Right. They wouldn't be offered onshore in the United States. They would not be allowed to be offered onshore. And yet these things were happening. And one of the challenges with that is that there hasn't been onshore regulatory clarity. The good guys, so to speak, we've been blocked from getting bank charters, getting broker-dealer licenses because of the lack of clarity in the U.S. So it's a mishmash of a lot of things that happened here. But there's one fundamental takeaway, which is that Bitcoin itself should never be leveraged. It cannot be leveraged safely. And anyone who thinks that they can lever it safely is going to learn a very hard lesson, that illiquidity is the same thing as insolvency. There is no such thing as, I'm just suffering a temporary liquidity problem. And here's why. No one is ever going to make more than 21 million Bitcoins. And so the moment that there are more claims to Bitcoin, there are only 19.2 million that have been mined and outstanding to date. There are clearly a lot more than 19.2 million claims to Bitcoin out there, and all these insolvent intermediaries that are going bust. And they're all claiming, I just have a temporary liquidity problem. No, they don't. They're fundamentally insolvent. And they went insolvent the moment they started offering more than the 19.2 million claims to Bitcoin. That means, because there's no lender of last resort, there is no clearinghouse to bail them out when they get into these liquidity crunches. That means that the insolvency that they had all along is being revealed. And good riddance to it all, because this leverage is not, it doesn't have anything to do with Bitcoin.